Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures. I got a daily chart here. We'll hop on the 15 minute in a few seconds, but the key takeaway here for me is that after testing the weekly pivot in the 77 area in the Globex before last night, uh, the Bears did a good job of staying below the the daily mid band. There was a reaction high 2 o'clock at, in the 69 area, but they never gave up mid band and they never retested the Globex highs, which was the weekly pivot fail. So it was a sell rallies kind of a day, and we spent the majority of our day doing that. What we've seen in the overnight tonight, and this is a 15-minute chart, is we've seen them try to revisit. Here's your 2 p.m. reaction high up at 69.5. They retested that last night, 68.5, couldn't get it done, and even made a lower, and now what you're seeing is you're seeing multiple pushes into the 53-54 area. Yesterday was really about converting the weekly pivot to resistance. In a perfect world, if you're a bear, you would have wanted to convert the monthly pivot yesterday. That didn't happen, but what's been happening during Globex all night is just a consistent probe. A little bit of an overshoot, but a consistent probe of the daily pivot at 64 and the monthly pivot at 64.80. If this area becomes sealed, then that opens up a move down to test last week's lows down at 2040. The reality in looking at this chart is that this is a much more, I don't know another word, I would have to say this is a much more responsible way for the bears to try to make progress in the market. The bears always get in trouble when they get completely out of hand. They start dropping things 2%, 2.5% in a day, and they make these gigantic dip bottoming candles that, anybody with a mouse and a dream can come in and just buy the dip. And all you need is maybe one or two at most higher lows, and then the bears just start bailing out because they start saying, well, here we go again, and it becomes a self-fulfilling prophecy. The way they're doing this by methodically taking out the 83.5, which was important on Friday and important on Sunday, Monday Globex, the weekly pivot at 77, and now trying to take out the monthly pivot at 63.64, that's a much better way to go about it. There's going to be bear market rallies. There are going to be pops. There were 2 yesterday. Okay? Pop and a pop. Okay? It's going to happen. But if the bears are in control of the market, and as long as we're below the mid band, they are in control of the market. I moved that mid band there. So here's your daily mid band at 72.30. As long as the pops are sold and they keep making lower lows, they're going to be in control of the market. So as we head into the regular session today, this low here, this reaction low at 50.25 from yesterday morning, that needs to be taken out. You need a lower low. You need to progress with lows. You need to sell rallies and progress with lows. If you can do that, the ultimate result is going to be a move down to the lower band. Bollinger Bands, they're truncated, but I can't call Bollinger Bandwidth at 4.2. I can't call that tight. So what we may continue to see is this back and forth between the bulls and the bears that, kind of hovers and engages with the middle band at different points. But a move up to middle band today that shows any kind of resistance at all, for me, it's a sell. And an inability to get through 50 is probably worth a bounce. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.